Hi, everybody. Welcome back to another edition of VCTV with your host, Kyle Ellicott. We're here to talk about our favorite subject. That's right, blockchain. But more importantly, what's going on around tokenization and equity tokenization, whether that be companies, whether that be real estate, or something otherwise. We're going to be talking a little bit about what's happening there. We might get into quantum. We might get into artificial intelligence. We may get into property and prop tech as well. Many different areas we're going to explore today around blockchain, but get ready for the journey. I've got some outstanding co-hosts who will be joining me here in just a moment. Before we do, a big thank you to the LATOKEN team and to Maria and Hasmik for making today's episode possible. If you haven't already, check us out on latoken.com to hear from today's speakers and all speakers of the VCTV family and much, much more. With that, again, I'm your host, Kyle Ellicott. Let's go ahead and jump right in. Welcoming up one of my first co-hosts today, Michael. Welcome to the show. A little intro, a little background for everybody.
Kyle, thank you very much for inviting me. I really appreciate you, extending the invitation. I am Michael Flight. We've been in real estate for over 30 years, and we went on a journey about 3 years ago to say, why can't real estate be more liquid? Why can't real estate be more tradable? And why can't you open up access to, the world to the benefits of real estate? Because certainly the stock market and all the rest of those places, you can easily get in and out. And so one of the things that we were really interested in was how do you marry crypto with real estate? And so we thought we've come up with a great idea, which is also, we found out, called a security token. So it's a legal security, but it's crypto with cash flow. So we've got a portfolio of super stable net lease properties kicking off all kinds of cash flow. And after a 1-year lockup period, they're freely tradable. So that's what we've been up to, and really looking forward to the discussion today because you got some high-powered brain that's on here.
Absolutely, thank you. And I definitely want to dive a little deeper into the cash flow generating side of this and just the real estate portfolio. Is when usually we talk about tokenization, it's just on a top level where we get into non-fungible tokens and some of the other areas. But what you're doing is actually creating something that is owning part of that business and getting cash flow returned from it. Right, so it's a new type of asset as what we haven't yet seen in the blockchain space very aggressively, and something that has been teased out as a future of something we may see. So I'm going to put a pin in that. I'll come back to it for just a moment because I have our other co-host who's joining us today, the one and only Grand Master of Artificial Intelligence himself, Gary Fowler. Welcome to the show. A little intro,
Thanks, Kyle. It's great. My name's Gary Fowler. Great to be here. I'm a serial entrepreneur and investor. I've done 17 companies, been involved in 2 unicorns. I was on the original management team at Click Software, which is sold to Salesforce for $1.35 billion, and also Eva.ai, an AI HR tech company that I co-founded with Dr. David Yang. I love artificial intelligence, quantum computing, cybersecurity, and tokenization. So I've been in tech for over 30 years, and my company today is GSD Get You Done Venture Studios. We're a premier AI and quantum venture studio located in Silicon Valley. We believe Silicon Valley is a port to the rest of the world and fully behind all the tokenization. In fact, yesterday, Kyle was speaking in Australia on TV about the Facebook and the emergence of tokenization of relationships and what the next social media will look like based on tokens.
I love it. And that's actually kind of where I want to start and set the stage. I mean, tokenization is something we're moving into more aggressively in the industry, right? We've talked about it. We've been teased about it. We had the ICO boom, which kind of gave us all a different taste of what it could or could not be in terms of the future of fundraising. But then also now we're looking at it, and Gary, you mentioned it, the future of social networking, of relationships in general, content. We're seeing it with art and collectibles. We're seeing it with digital twins, the idea of bringing something physical to digital, digitization. And now we're seeing it in real estate with a few different offering and sales that have recently happened globally as well. So talk to us a little bit more, Gary, if you could, about that example that you had around social networking. And is tokenization the future of social networking and media, or relationships in general? And then Michael, I'm going to come to you around real estate here in just a moment. But Gary, set the stage for us around social media.
Yeah, sure. So, I mean, one of the things we talked about yesterday is we talked about who owns the data, right? Who owns the data that you have? And so if you get on a Facebook or Twitter or LinkedIn, whose is it? I mean, sometimes my contention is that the value of our data is really important, and more importantly, the value of those relationships that can be created. So why don't we go down through and look at it a bit differently? Now, so if we look, in fact, my next article in Forbes magazine, Kyle, is about the next level of social networks and the tokenization of them. So what I contend is that if we use that value of those relationships, the views of value of our data, imagine what the possibilities are to be able to trade, to exchange, to develop relationships. Although it's going to turn companies like Facebook on their head, because it's a different approach. And at the same time, the question is, do people want to have to pay for, so today, if Facebook doesn't use your data, you would have to pay for it. And how much would that cost be per month? We're so used to getting things for free from Google. We're so used to getting things for free from LinkedIn. Or would people willing to be able to pay? My contention is that the tokenization, the next social media, in fact, as I said, I'm writing that article today. Hopefully by tomorrow it'll be done. Is going to change everything, because we will have tokenization. We'll be able to exchange those tokens for value. The cloud, the power of those relationships that are out there, to be able to transact. It's kind of like a customer loyalty program that you have in an airline, in a sense. You'll be rated in terms of what the value of that token is and how to be able to get to the next steps to get that value up. That's where the future is. And in terms of tokens being used in terms of real estate, I've been involved in several of those projects. Is quite interesting, because to be able to use that token to be able to get the value out of the real estate, and to be able to trade those in a compliant SEC, if you will, approved fashion, is very interesting. And I know we're going to jump into the details about that a bit more, but it's those are some of the next levels. It really democratizes the opportunity for everybody. Hello?
Keep talking, Gary.
Yeah, okay. I'm not sure. Wow, let's talk about a pregnant pause there for a second.
But Gary, that you bring up some great stuff, and I love the name of your company, GSD. But you bring up some great stuff. I mean, people should be able to own their data and control their data, and why not get the value out of their data?
Yeah, absolutely right. Absolutely right. And so that's the future. And if we look at it, it doesn't matter. It's really borderless in terms of being able to share that information. I mean, we're doing it today, but it's other people are be able to benefit from it. What's going to happen is, as we look in the future, it's really going to democratize it. And these are exciting times, because it's going to turn the way we look at social networks, the way we look at real estate, the way we do transactions, the way we do barters, is going to change the way we do it, fundamentally change it. Now, the question is, how are the regulators going to view it? How do we stay compliant so it's not look like an SEC enforceable transaction? How can we work together to make it, and not just the SEC, compliance across multiple geographies? But that's really where the beauty of these next networks come in. How about yourself? So tell us a little bit about the real estate and some of the amazing things that you're doing today.
Well, we got into, like I said, we've been in real estate for a while, and I really didn't understand cryptocurrencies, and I didn't understand the value of cryptocurrency, but I really said that, and I didn't fully appreciate the value of blockchain, but I knew there was value there. And I kept saying, blockchain, blockchain, blockchain. This is the way things are going to go. And so that's when I really started looking into blockchain. Is really, as you pointed out, is going to be the financial system of the future. It's just, faster, it's better. You actually own your money, which is really what the cool part about it is. And again, tokenization, you control your actual data, you control your money, you can actually control much more, varied parts of your life. So that's what's exciting about it. And what we decided to do was, how do you take, because the cryptocurrencies are, sometimes insanely, well, they're most of the time insanely volatile. And how do you take some of that stable, just persistent, consistent cash flow from real estate and make it more tradable, make it more liquid, make it more available to everybody throughout the world so that they can participate in that? And so what we tried to do was create, one of the most stable products you can. So net lease properties are, leased to major corporations for long terms. So what we like to describe them as, and what they are described as bonds wrapped in real estate. So you've got, major companies like Shell Oil Company, like Walgreens Boots Alliance, Aldi, and these guys, and they're giving you long-term cash flow. And what we wanted to do was tie that all in together into a diversified fund that's geographically diversified, that's diversified in terms of your income streams, and diversified by industry, and then tie that into a security token so that somebody can depend on a regular monthly income, and also the appreciation that comes with real estate, including, it's a good defense against inflation. So that's, kind of where we're at, Gary.
So what's the buy-in doing that? What's the buy-in that somebody has to, in order for somebody to participate? How much does it cost at a minimum level for them to be able to do that?
Okay, what we originally wanted to do was to make a fund that was available to your average retail investor. That's extremely difficult to do, and we'd have to do a Reg A filing, and it would be very difficult to get non-US investors involved with that. And so we ended up doing what's called it's a regulated SEC compliant fund, but it's available to accredited investors, and the minimum amount is $50,000. Each individual token is going to be valued originally at $10,000 a piece. But the really cool thing, and this has been approved by the SEC, and what we're really excited about, is after that 1-year lockup period, it's free to trade to any investor. So the minimum share is still going to be $10,000 a unit. But anybody who's accredited or not accredited, so it's, accredited means you have to have a certain, at least $1 million, and you have to, or earning a certain amount. But it's going to be available. So people within 1 year that might not be at that level will be able to get into this. And the other really cool thing that we love about it is, there's all kinds of DeFi things that, people really haven't, pierced out yet. But we've been talking to BlockFi, and so if you can take from the distributions of the security token, you can take your stuff as a regular, you get a check or you get money sent directly to your bank account, or you could get it sent to you as USD or Ethereum, because we're doing our token through Securitize, which is over by you in San Francisco. And they could take their USD or Ethereum and deposit that. We've developed a relationship with BlockFi, and they can not only get their cash flow from the real estate, but they can supercharge their earnings by getting extra earnings from BlockFi or any of the other DeFi companies out there.
Oh, that's interesting. And what about after that year lockout? Can somebody theoretically sell portions of that coin? Can the coin be split? Are there ways to get it to smaller investors or not? After that?
The minimum, because we had to do it within certain regulations, so we're restricted to a maximum of 2,000 US investors. And so we had to make the size available so that in all the combinations, we wouldn't go over 2,000 investors. We had originally hoped that it would be, like the vision in 2017 was, it's an ICO. It's, you could split it up even to, $100 a piece. But that really didn't happen because, again, we learned that there were real estate securities laws which still apply in the crypto world if you're going to be legally compliant, and also there's tax laws. So we spent quite a lot of money trying to make this conform to tax and also the securities laws, so it's legally compliant.
That's fascinating. And can you give us a real example of something that you're working on today where the audience could, might be able, those accredited investors could participate? Is there still room in the coins that are out there today?
The coins actually haven't been issued. We just launched the fund at the end of May, and we're still in the middle of fundraising. And once we hit our soft cap of 5 million, we'll issue the first tokens. But what we're doing is we're going out and investing in Walgreens. We're investing in Dollar Trees. We're investing in Verizon, AT&T. So you've got long-term leases with some really well-known companies that are going to be around for a little bit of time and pay you cash flow.
Interesting. And how does it work in terms of these deals with Dollar Tree? How do you assume the lease, or how does it work? Do you own the properties? How does it work?
The fund actually owns the full property. So the fund, each individual property, the fund is going to buy and own, and then at a later date, once we buy enough properties, we're going to put a loan on multiple properties, and then leverage it some more so that they actually the investors in the fund can leverage their money and also get more diversification in cash flow.
And what about the value of those tokens? Do you see the value of those tokens rising beyond what they original paid for the tokens based on the scarcity?
I'm going to be honest with you, Gary. I don't know the answer to that question. We expect that the value of the tokens would rise because we're going to do quarterly net asset value reports. So it's going to say this is the net asset value of all the properties in the fund. And so there should be appreciation, not only normal appreciation because the properties, are in areas that are scarce and they're well located, and we're also doing them in great dynamic areas like Texas and Florida and the South. So you should get natural appreciation from that, but you also have built-in appreciation because the rents go up, and as the rent goes up, the properties get more valuable.
No, that sounds really interesting. And how many different groups do you have relationships with today? I mean, is it just, do you have 3 or 4 retailers, or do you see it expand into some of the other retail groups?
Oh, well, we just have a category of properties that we're investing in. So we're investing in auto service. We're investing in medical retail, which includes veterinary clinics. We're investing in drugstores. We're investing in dollar stores. Mobile phone providers. So we invest in all those classes, and so out of that, there are hundreds, if not 500 different tenants that we could potentially invest in. We do look for investment grade, so maybe like a Jiffy Lube, or for some of the international people, they have heard of Walgreens, or we probably wouldn't buy a Whole Foods because they're too expensive, but Whole Foods is guaranteed by Amazon. So those are the type, but we will invest in grocery retailers. So those are the type, and we've been in the business for 30 years, so we've got relationships with owners and tenants to get into that.
And do you do it as one-offs, or do you do it like as a chain? Does somebody say, "Oh, I'm going to do I don't know how it works with Dollar Store," but do you do it like, say, "I'm going to buy all the assets," and or you already own those? How does it work?
We do get offered portfolios of assets, but typically we're building the portfolio, one off at a time. And we've got a acquisitions department, and as I said before, we've been buying, selling, managing, and redeveloping, retail properties. I've been doing it since 1985.
Oh, that's a long. So you've been around the block a few times with this thing, and
we've been through a few ups and downs. So I always tell people I haven't had everything bad happen to me, but I've had enough bad things happen to me that we don't panic when they do happen.
Well, that's part of it, right?
Yeah,
You don't
and
want to.
you probably have been through that too with the amount of like, you know, startups and everything else you've been. I mean, tell me a little bit of a horror story about you know, some of the stuff that you've had to climb out of.
You know, I owned I started a construction company, technology construction company, doing modular homes before anybody was really doing modular homes. And I decided before people were doing 6-box modulars, I decided to design one and build one. And I built 27 of them. And in that particular situation, people, although it was, from my perspective, as good as a stick-built house, people didn't understand the value of the technology, nor did I made a big mistake because I had put a navy blue carpet in the house when you're supposed to stay with neutrals.
Right.
And it ended up, you know, my not doing my customer development ended up costing me quite a bit of money over, you know, a 3-year period of time. I eventually moved it, but I understood that it wasn't about the tech. The tech was, you know, state of the art. The house was an amazing house, comparable to, at the time, probably $1.5 million, $2 million house in that particular area. But getting people to understand the technology. So part of it is doing your customer discovery. Part of it is the acceptance of technology. And I was too early on the curve for them to understand it. So the lesson is that make sure you're going out and testing the market before you throw a lot of money in. And that was probably the worst horror story. But the situation, it took 3 years of pain to claw through because the market went south and interest rates went up.
Yeah. No, Gary, I should have talked to you probably 3 years ago because we're still probably a little bit early on the real estate tokenization. And there's a lot of real estate investors that are scared when they hear blockchain because they think, oh, it's one of those cryptocurrency scams. So one of the things that we have been doing is we've been doing regular meetups to educate real estate sponsors and real estate developers on how they can actually raise capital and how it's going to actually help their investors invest better in real estate and make more capital available. And then the other thing we're doing is we're hosting the Blockchain Real Estate Summit down in Austin, Texas in September, just so that more and more, what we're trying to do is bring more and more real estate assets onto the chain. Because we feel that, you know, the more people get familiar with it, the more people, you know, see that, well, this is a better way to, as we had talked before, it's a better way to control your money.
No, I agree with you. And, you know, the situation is, I can tell you right now, we're doing, there's a lot of things that we're involved in. And I can tell you some of the wealthiest people in the world that we're working with are actually looking at real estate. They're looking, as I said, with how to tokenize these networks and get the value out of the data that you have. And I mean, literally, I have a conversation tomorrow with my partners, extraordinarily high, ultra net worth, I guess, high net worth individuals about that particular situation. So the good news is it seems like acceptance coming and the big money's starting to roll in. And the situation, you're right about getting the visibility. I mean, one of the things, Michael, you can do is write a lot. And what we've done is, you know, the last year, I've written about 159 articles now. And it's part of it is just having the information out there for people to peruse.
Right, right.
And all of a sudden it starts creating the momentum and the snowball effect. So I would say you're at the right place at the right time. And it's going to happen because this tokenization is upon us. And now the situation, who buys in? Question for you. What about international? What are you going to do internationally?
Well, we are doing a separate international token. The tough part is that, remember I talked to you about the tax laws? Well, real estate, the U.S. punishes non-U.S. real estate investors. So we had to do a different style of token. So it's going to be more debt and less equity. The U.S. part is all equity, but you're still going to get the same cash flows and you're still going to get the same appreciation through that. We just had to change the mix a little bit for international investors. But that was one of the real attractions. We kept saying, we've got in the United States, we're blessed with the largest real estate market, one of the most active real estate markets, and one of the most liquid real estate markets. And people should be able to get, a shot at doing this. And at the other hand, we can see that, like I can see, in the near future, a guy in the middle of Iowa on his tractor, buying $1,000 worth of an office building in London, or I can see somebody down in South America, buying into a building in Singapore. I mean, I just truly believe that it's going to create worldwide access for real estate. And the figure that I always throw out is the largest asset class in the world by far, it dwarfs everything, is real estate. $280 trillion of assets that are just locked up.
That's amazing.
Yeah.
No, you're right about it. How do you participate? A lot of times you look at these big developers, et cetera, that have that. But if you can bring it down so other people can partake, because part of it is figuring out who owns what and how to be able to get into the reindeer games. And so,
Well, and the other thing that has always been an issue is it hasn't been worth it for, and I say this in the gentlest terms, it hasn't been worth it for larger institutional owners to make it available to smaller investors, because it's just been so much paperwork, so much expense, and all the rest of it. But with tokenization and automation, that makes it much easier to keep track of all this, to keep track of capitalization tables and all the rest of it. So I'm sorry I interrupted you, Gary.
No. It's fascinating. And then, so are you going to buy real estate internationally now? Do you have that now, or what are you going to do with it?
No, our plans was to get this up and running and, show that it's proof of concept and it's very successful. And then what we wanted to do, and what we still plan on doing, is going into different markets internationally to make it even more diversified and more stable.
No, that sounds great. And so so you've already started now, you're raising $5 million. How do people, where are you raising the 5 million? And I know a lot of investors watch VCTV. How do they get a hold of you? And what does it look like? What are they buying into at the 5 million?
They're buying into a portfolio of properties. They can find us at libertyfund.io. That's libertyfund.io. They can contact me at hello@libertyfund.io. But we'd be more than happy to. I'll jump on a call with them, or we've got other people in the organization that would jump on a call with them, work them through the process. We've got some great partners. We've got a fund manager, Stonegate. They're internationally known for fund managing, and our technology partner is just outstanding. Securitize, as I said, they're based out of San Francisco, and Jamie Finn over there has all the legal licenses, so that not only is it a beautiful dashboard and it's a beautiful investor experience, unlike a lot of real estate investors are not used to, that type of thing going in. You get all your reports, you get everything, you can see what's going on the panel there. But also there's a spot where they have an ATS where you can trade on their ATS, and then there's spots for exchanges that the exchanges will plug in right there. And if they wanted to list their shares or buy more shares, they could buy through those exchanges.
Yeah, great. So, so people in LinkedIn, are you on LinkedIn also, Michael?
Yes, I am. I'm on LinkedIn. It's Michael Flight under Liberty Fund.
Excellent. So we're coming to the top of the hour. My name's Gary Fowler, and we're co-hosting today for Kyle. I'd like to thank the entire VCTV team for making Hasmek, and the entire VCTV team, Kyle, for making this possible today. My name's Gary Fowler. You can reach me on LinkedIn. You can reach me on Facebook. Love to hear from you. In fact, in about 20 minutes, I'm going to be bringing one of the top persons from Startup Network on my show, GST Presents Silicon Valley AI and Tech. Tune in. Stay tuned for another edition.
Hey, Gary, can I introduce you or ask? What's the link for that to get to that show?
If you go to gsdvs.com to my, you can get the link there. You can go to my Facebook page, and I'll be running Reel. But he's one of the top. What he does, Michael, is very similar he highlights startups from around the world, and they have an investor group that's tied together that invests collectively into companies that are raising money, and up to $5 to $10 million. Most of it's on the earlier stage, but he's really defined an interesting model of kind of like a super angel group.
And what's your main website to get to too for GSD?
Yeah, gsdvs.com, and check it out. We help companies from all over the world go global using Silicon Valley as a port. We also do growth stage acceleration, working with companies to be able to help them expand to get into the global marketplace, and again, using Silicon Valley as a port.
Fantastic, man. It's a pleasure to work with you today, Gary. Look forward to meeting up with you really soon.
Sounds great. It's always good to be able to move quickly on your feet.
Thank you.
Take care of yourself. Bye-bye.